Well, now for more insight into China's global investment strategy, I'm joined by Andy Rothman, an investment strategist for Matthews Asia. Welcome to the show.
Hi.
Now, why are we seeing such a surge in Chinese overseas investment in the last year?
I think it's a combination of reasons. Chinese companies have seen their profitability improve, the economy is stronger, and also the Chinese government is encouraging Chinese firms to move abroad with their investments. But I'd emphasize two things out of the numbers that your correspondent was just talking about earlier. The first is that despite tighter enforcement over the last year and a half of China's capital account, we're still seeing good flows out of the country. But the second point is maybe more important, which is your correspondent noted that Chinese investment in the United States tripled last year. And I think it's going to be important now to recognize the political consequences of that, which means that China itself is going to have to open more to U.S. investment in China.
And that's certainly something that investors on the reverse have been looking at. Now, I'd like us to look at the ChemChina-Syngenta deal. It became China's largest overseas acquisition ever. Can we expect more of these mega deals to continue in 2017?
Probably. But again, I think that in many cases, the political aspects of this kind of back and forth with investment is going to overshadow the economic side. And it's going to be really important for the Chinese government to give the impression and reality that it's being more reciprocal, that, for example, in chemicals, in services such as accounting and legal work, financial, that foreign firms are just as welcome to do business in China as Chinese are to do business abroad.
So then which countries at the moment, given some of the political environments we're seeing, which ones tend to be the most attractive for Chinese investment?
Well, I think that every place is pretty eager to get Chinese investment now, but obviously in the United States, some of the political issues are the strongest. And I think that I would encourage the Chinese government to take proactive steps to kind of forestall the tensions that your correspondent talked about. And the best way to do that is to make U.S. firms, as well as European and Asian firms, feel more welcome, to give them more opportunities to do in China what Chinese firms can do in their countries.
Now, we've certainly seen China take steps in that direction. It is still in its opening up process. Let's look at some of the sectors that we're seeing some of this Chinese investment flow to. What are some of the standouts?
Well, the biggest area receiving money in the United States last year from China was simply real estate. But we also saw investments ranging from high tech. So I'm in San Francisco and Silicon Valley. Some of the Chinese internet names have been very active. The dollar amounts might not be that big, but I think that hides the fact that these are Chinese firms making investments in innovative sectors and helping improve their access to global technology and global engineering talent.
So by doing that, you touched on some of the benefits. What else are we seeing as a result of this increased Chinese investment overseas?
Well, I think this is beneficial in both directions. It helps Chinese companies get access to global talent, feed them into the global supply chain, and it means that over the coming years, companies on the forefront, particularly in the technology sector and pharma, will be able to take advantage of global trends and developments. It also should be positive here by allowing American investors to get more comfortable and accustomed to Chinese companies. But again, I really want to emphasize the need to make progress back in China to make sure that this process doesn't get upended by political problems.
And as I said, China is still working on that. It is still a work in progress. Obviously, America has had several more years in that process to go ahead. Now, let's also look at some of the concerns about Chinese companies. If they are still focusing on this overseas acquisitions, could that possibly be at the expense then of developing the domestic market in China?
No, I don't see that as a problem at all, because while the numbers sound big and the growth rates are very high, we're talking about a very, very small fraction of overall investment within China. So I don't see this as a negative at all from the Chinese domestic perspective.
All right. Thank you so much for your insights, Andy Rothman, investment strategist at Matthews Asia.